Good morning. This is Britton Brown with Trade Hive. It is Friday, January 30th, 2026. Today is your daily pre-opening playbook. Just want to go over some charts here for you. Got a lot going on, so I'm going to get right into it. Remember, it's Friday. It's Capital Preservation Day, so A-plus trades only. I'm going to go ahead and slide into the charts here. This is the daily chart. As you can see, we broke a major trend line. The main things I want to point out today is that we're really just in a big transition. As bullish as everything looks, sometimes you have to look at the bigger picture. And if you go back and kind of scroll back, you'll realize that really we're just consolidating. We're up in the premium zone with the market not getting any participation to the long side. There's a lot of geopolitical events going on. So it's not as bullish as sometimes it might seem. Institutions will take advantage of that, as mentioned yesterday. Things that I will point out, we are currently on the daily from overnight trade underneath obviously the big daily trend line. This is that blue line right here. We're also below the imbalanced trend line, this white trend line right here. And price is sitting just above the green weekly trend line, yesterday's low, and is going to remain above that red trend line. That is the monthly trend line. So keep that in mind. That's an area that we will watch. We're working off of an old red box right here. The projection obviously was a little bit aggressive off of that, and basically how a red box works on this is trading Wyckoff. Of course, we get into consolidation, a lot of money changes hands, we go up, and then they take the measured move from the bottom to the top of that, and that's where you get that projection to the downside. It works great on the longer time frames, but when you start to look at big moves like that, you kind of discount that. Did that mean that we couldn't go down? No, obviously we went down and we touched the trend line and headed back up. We're just having problems getting above this high over here. So the reason I mention that is a likely target is as low as 24,797.75. Doesn't mean that's going to be where it stops. It just means that that would likely play out if more selling comes in. So keep that in mind. That's that 24,800 area. So basically, there's no longer a clean bull trend. This is a corrective distribution phase unless proven otherwise. How do you prove otherwise? We go up and make new highs. Anything can happen. This is the NASDAQ. The markets are crazy, so a lot of times things that don't make sense end up making sense later on down the road. For the bulls, they have to defend this weekly trend line area that's sitting right around that 24,560. That was the low yesterday, and will remain the focal point today. That's got a high likelihood of continuing lower. The daily probabilities, continuation lower towards that 25,400, that 24,800 area, which is where we're currently at, is the 60%. That was what we were looking at overnight and into the morning. To hold that weekly support and rotate back to the 25,900 to 26,050 zone is about a 30 to 35% probability. A full bull reclaim trend repair back up above is a 10 to 15% probability structure. So let me get out of here. Let's go over to the 4-year. I'll just kind of walk you through the longer time frames down to the shorter time frames. And this is where things start to get interesting. We popped a gray box early yesterday, as I mentioned in yesterday's pre-opening playbook. When I see something like that and we're up towards the top, you're looking at a significant move. Typically for a 4-hour chart, especially because we're breaking the major trend line for the daily, along with that break of the gray box, we have heavy acceleration. Those moves are typically anywhere from 800 to 1200. Very few times do we only get a 600 point move and then stop and then head back. But you can see that we are moving really off of this gray box or this red box back here. This is kind of the driver, even though we've got a gray box down here. We had a nice 1100 point run. I think ultimately, if we hadn't popped these gray boxes here, this would be turning green, which is high volatility, and that's to be expected. We did have this green with a red box back here, and you can see we went down through this fair value of this red one and got right down underneath this one and then snapped back. So those are interesting moves you kind of want to look at. So, I kind of go back and I'll look at this and go, okay, we were really focused on this. This was a pretty clean, high volatility move. We were 3/4 of the way up on this zone. This was right in that 50% level. If you go back and look at a longer term consolidation pattern. So what happens is we get up into high premium, we pop a gray box and we head back down. So then next thing I'll go back and we'll be looking at driving even lower, at least testing this low over here. The 9 EMA is getting ready to crack that 32. That's going to accelerate more selling. So the continued sell-off, trend expansion lower, probability sitting at 60 to 65%. If you're thinking, hey, we're going to pause, consolidate near the weekly support and then head higher, that's about a 25 to 30% probability. And then a sharp reclaim squeeze higher is as low as 10%. Doesn't mean it's not going to happen. And, I keep mentioning when I see 10%, 12%, those are kind of red flags in the back of my mind, meaning those things can happen. And so, it's a herd mentality. If they start to happen, it's awfully pretty violent. Let me get you over to the 1 hour, and then I'll get on the execution chart on the 5. So, again, looking at the 1 hour, we have a fresh gray box that just popped overnight. And this gray box, typically when we had this one up here, that was our first sign that this 4 hours was looking very weak. This is a mid-trend. So this is going to be pretty interesting because the fair value of this gray box right here should see a rejection. They got to reclaim this if they want to save that low from yesterday and turn things around, but they're walking into a lot of selling. Doesn't mean they can't do it, just means, hey, if we see a failure up in this area, we don't get above that 26,000 again, can't reclaim it, then I would expect the sharp sell-off to continue. Again, the 9 EMA is well below the 32, and we are sitting right at the 1 hour imbalance moving average. So that's that white line right here. And then, of course, we're right at the green moving average as well. So probability-wise, acceleration lower, gray holds 55 to 60%, rejection, short covering bounce, meaning we're going to go back up through it, is only 25 to 30%, and a full reversal trend reclaim is sitting just at 10 to 15%. On the 5-minute context side of things, this is the execution box right here, or chart. We are working off of a green pattern. We were unable, now these are always kind of identifiers for me. We were unable to go down and hit the target. Doesn't mean we won't get down there. That's sitting at 25,590. And then we rejected, came back up, got above fair value. And once we crested above 25,793 on this box that occurred this morning about 2 to 3 o'clock Central Time. It put a projection to the upside sitting at 25,935.75. So I would suggest going back. This report is for free. It's on the website at tradehivecommunity.com. Go back, review these numbers, because oftentimes when you start seeing projections and then rejections line up, it will give you a really solid trade. Here's the main thing. VWAP is sitting at 25,826. That's this blue line right here. And again, when I say we're running right into traffic right here, we are. You can see we popped above the green trend line. A little bit of a rejection right now. This is the ultimate target, I think, that's going to play out. Can they get back to VWAP? Can they reclaim that? Or is it going to reject up here? And here's the thing, probability-wise, if the rejection here is test and rejection sits at 30 to 35%. The push lower to that 25,590 target sits at 50 to 55%. Now VWAP reclaim and a hold is only 10 to 15%. So I'm going to finish up with this, and that is your trade ideas for today. It's Friday. It's early. I got up about 4 o'clock this morning to do this for you and go through everything. And so I need some coffee. With that said, on the website, this is on there, so I'll just kind of review it. VWAP rejection short 25,820 to 850 is a 55 to 60% probability. Breakdown continuation lower below yesterday's low sits at 55 to 60% probability. Mean reversion bounce 25,400 to 500 is sitting at 30%. Overall, primary bias, sell rallies below the VWAP and broken structure until they can reclaim and repair. Those are low probabilities, but again, watch the institutions. There's not much of a reason for the institutions to come in and play until they get back into discount. And that back into discount area, I'm going to pull this up real quick, is going to be sitting down in this lower zone right here. So when I look at this little blue line right here, just above the monthly, is sitting all the way down at 24,600. Do I think we'll get all the way down there? I think the real meat and potatoes is going to be sitting at this number right here, and that is that low that was put in on Wednesday, the 21st of January. That was a violent move, the first break of the major trend line. I think that's the real target. When we did that and then we took out these highs here, that was the weekly low of that particular week as well. We've done everything that we're supposed to do constructively in a pattern that's more of a consolidation. And again, if you look at the long-term pattern consolidation aspect of it, this looks super bullish, right? But let me show you something real quick. I'm going to flip over. I'm just going to pull this up real quick for you. And then I'm going to do this. And if you look at from this high to this low, and this is the 50% level right here, you can see this is where things get crazy, and then we drive. This was last week's range right here, this box right here. I had a green box right here. That was a go, and we headed up. Now, this below here is liquidity, and that's the area that the institutions are going to be very interested in defending once they pierce that. Could it accelerate? Absolutely. But when you look at what's happening here, we get above this area right here, and that turns into solid premium. We got right into this fair value of this old red box over here, and guess what happened? Institutions are going to take risk off the table. And so those big longer term players aren't going to want to participate until they get down here. So that's why we keep seeing this violent up and down, up and down, up and down. Anyway, let me get over here back to the webcam. I appreciate you. I hope you have a good day. Be careful. It's Friday. Like I said, A+ trades only. It's been a great week. It's been a lot of volatility. Hopefully you caught some of those moves. And don't get caught up late in the day on a Friday. That doesn't make any sense. Appreciate you. Have a super day. We'll talk with you later.